My name's Craig Earlham, Senior Market Analyst at Oanda. Today we'll talk about Euro Sterling. Now, this is not necessarily one of the charts which you'll typically see with regards to Brexit, because the Euro and the UK are so intrinsically tied. The outcome of this deal will impact both, but it is one of those charts which may be of interest. One of the reasons is because of the intrinsic closeness of the two regions, of the two economies, we are finding this pair range bound more so than we are seeing elsewhere. So what we have is this interesting range of between around 86 and 91, which the pair has bounced between for quite some time now. And you would think that the outcome of this deal will ultimately cause the break of one of these levels. Now, we've seen, for example, the upper end of this range coming under pressure when the talks are progressing badly, when the chances of no deal are increasingly likely. What we've seen instead more recently is actually it's the bottom end of this range which is coming under pressure because the prospects of no deal are becoming increasingly diminished. There's an overwhelming majority in Parliament against no deal Brexit, and as long as that continues and therefore the prospects become even more dim, then I would expect the support for the pound to continue to rise, especially now that we are approaching exit day and we could potentially see a deal on the table, get over the line, get enough support in Parliament to move us into that transition period and remove a huge amount of uncertainty. What we've seen off the recent lows has come on the back purely of profit taking. We've had some weak economic data along the way which has helped soften the pound, which has helped bring us back towards the mid part of this range around the kind of 88, 88.50 levels where we are running into resistance currently. Now, this isn't a euro strength story, and I don't even think it's a pound weakness story. So at this moment in time, we are holding up around the mid part of that range. Unless we see one of those stories change, then the prospect of getting towards the upper end of that range is potentially a little bit slimmer than maybe the path below, which is for pound strength on progress in these talks, but also on the prospect of some weaker euro data, which has also been a key figure of this. Ultimately, if we do see this progress happen, we do see a deal reached that can pass through Parliament, get the majority of votes, which Theresa May very much failed to get a few weeks ago, then we could see the bottom of this range come under significant pressure and break back below. We have to remember that this is a newfound range. Prior to the 2016 referendum, we were trading well below these levels, and I'm not saying that we're necessarily going to make up all of that lost ground, but it shows that there is a big void below where we're trading now that has the potential to be broken into because of these Brexit talks coming to a successful end, because of the worst case scenarios being avoided and the UK moving into a transition period, which will mean continuity for business, but also probably a certain amount of stimulus from the fact that we've got consumers who will be more clear about the outlook and therefore more optimistic, which usually is reflected in higher spending, particularly with wages growing, but also businesses as well, pent-up investment that may be released again in the aftermath of this because of the certainty that it will provide, giving that little bit of an extra boost to the UK economy. So for now, we are range bound and we are seeing a bit of profit taking, but if Brexit talks continue to progress as they appear to be moving right now, then I would expect the bottom of that channel to be coming under significant pressure in the weeks and months ahead.